Christina Brown here with the Brown team at Sage Store Realty. And today I am talking all about your credit, giving you some credit tips, do's and don'ts. So let's dive in and talk about what even credit is. So credit is a way for people to monitor your spending habits or your amount of responsibility you have with borrowing money and how you pay it off and if you pay things on time and all of those kinds of things. And of course, we are rated and we are scored on that. But what a lot of people don't know is that when you purchase a home, they are looking at a specific version of your credit score, of your FICO score. There are over 100 versions of your FICO score. For example, let's say you apply for a credit card and they're like, you're instantly approved. We will give you a credit line of $3,000. And then you go and you purchase a vehicle and you go to that dealership and they're like, yes, you're pre-approved. You can spend up to $25,000. Then you go and you talk to a lender for a mortgage and they decline you. So you have to know that each type of credit pulls a different version of your FICO score and they are looking at different things. Sometimes if there's an issue, usually it's things like your amount of usage. So if you have your credit cards maxed out at 80-90% or more, mortgage companies don't like that so much, right? So a way to boost your score is to get your debt to income ratio down, but also your usage on each and every line of credit that you have. It is better to keep your lines of credit under 30% of usage. They would rather see you with 20 credit cards with $3,000 limit and you've only used less than $1,000 than having one credit card with a $30,000 limit or you have $20,000 because you have 2/3 of that usage. So they're looking at the amount of usage you use of your credit. So if you can keep multiple lines under that 30% mark, that's going to boost and raise your score. That's one thing they look at. Late payments. Do not make late payments. If you get behind, you can very well get approved for a credit card and maybe even a vehicle. But you will not get approved on a mortgage if you are not making your payments on time. They want to see that you have not missed a payment in the last year. There are exceptions to every rule, but just keep in mind that is super, super important. The other thing is, you may borrow money from a relative for your down payment, let's say. Don't get those funds and transfer those funds to your account without consulting with your lender first. Don't just start transferring money around because your lender will have an issue with that. There's a way to do it and a way that they're going to want to see it documented. Unless you get those funds, you deposit it, and then they season or they sit there for 90 days before you even reach out to a lender where they're already in your account. If that's not the case, don't just start transferring money. Hey, your grandma's going to give you $5,000 and your mom's going to give you $3,000 and your dad's going to give you $2,000. You can't just start throwing all that money in your account without it creating issues if it's not documented correctly. Yes, you can borrow funds. Yes, you can take gifts. Yes, you can. However, there's a way to do it. So don't transfer money during this process without consulting with your lender on the proper way to do it. Don't apply for any new credit while you're under contract on purchasing a home. So don't go out to Nebraska Furniture and start shopping for furniture and apply for credit. Even if you go and get a credit line set up but you don't actually put anything on it, red flags could totally go off and that can mess up the whole process. It's all about your debt to income ratio and a lot of other things that's really scrutinized when you are buying a home. So be very careful. Don't go out and buy a new car. That's another line of credit, right? Without consulting with your lender first. Some people are able to do it and it's fine, and some are not, and it's ruined the deal. So just consult with your lender. They're on your side. Don't close any credit card accounts. So many times we'll see people be like, oh man, I've paid off these 3 credit cards. I'm so excited, now I'm gonna close them. Well, that will drop your score because all of the credit history you've established with those credit cards is now gone bye-bye, and therefore your score goes down. So keeping those lines of credit open, what you can do is freeze them where you can't use them or they can't be stolen, but do not close them. And especially any account where you've had for a period of time. Sometimes we've seen people, man, I've had this account open for 20, 30 years and I decided to close it. Your score will go down so bad. That is amazing credit history that they can use in your favor to boost your score. But you can put a freeze on your credit, so keep that in mind. And then another thing that people do in an attempt to help is if they know they have a collection or they get notice of a collection, they will pay that collection off. Be careful. Again, consult your lender first because it depends on how old that collection is. I'm not telling you to not pay that collection, but I'm telling you, you may not want to pay it while you're applying for a mortgage. Wait till after you close, and then you can absolutely pay that off. But we have seen people pay off a collection and maybe it's been sitting there for the last 6 years, unpaid, just sitting there. And so it's fallen so far down into their credit history that it really doesn't have a huge effect on their score, but it bothers people and they want to pay it off, and I get that and I respect that, and you should. However, not right now while you're trying to buy a home. Close on your home and then pay it off, because what happens is, let's say it was 6 years ago, so it's so far down on your credit report that it's not a huge ding on your credit, but then you pay it off, now all of a sudden it's current. It's showing, oh, this activity just happened. It brings that collection to current and makes it like very present for the time, which will drop your score. So be careful in paying off collections without consulting your lender. Definitely check with the lender. Don't just pay them off thinking you're doing a good thing. Don't change jobs. I know this seems obvious, even if it's in the same line of work, even if it's a promotion, even if it's a promotion with the same company. Consult with your lender because there's so much involved in this that they're looking at, and what are they promising you? And if it's more pay because of overtime, they won't count overtime, or bonuses or things of that nature. So you have to be really careful. Just don't change jobs without consulting your lender. You can say, hey, I have this job opportunity. Will it mess the deal up if I take it? Or should I postpone my start date and work it around when you close on a house? Just have to be really careful. So don't change jobs without talking to your lender first. Those are really the biggies. Really just be responsible, by paying things on time, don't miss any payments, and just keeping that usage down. Those are the greatest tips I can give you. But of course, every situation and scenario is different. So if you need help for your specific situation or have specific questions, reach out. We'd love to help. We can completely answer your questions and help you come up with a game plan if you need steps on how to improve. And sometimes people have to get bad things that aren't even theirs off their credit. We can help with that as well. We have great people that help with that are honest and reputable. So anything we can do to help, reach out, let us know. Have a great day.